Happy Monday, everybody. Okay, so last week we got the big news that we were all waiting for, right? Jerome Powell with the Fed announced a rate cut. Now, we thought a rate cut was coming. Everybody did, because the Fed has been announcing that they're expecting to start making rate cuts. And the big question was none of us knew whether it was going to be a quarter point or half a point. Quarter point is 0.25%, and a half point is 0.5%. Well, they went big, right? Go big or go home. They went big. Typically, the Fed moves in quarter point increments because it's like adjusting your stove. They make little adjustments here and there. Even when they were raising rates a couple years ago to the highest point, actually to the highest point ever, but more than that, at the fastest rate ever in American history, they were still doing so by quarter point increments, right? Because they wanted to make a change, see how it affected the market, make a change, see how it affected the market. Well, most economists were thinking they were going to make a quarter point change downwards this time. And no, they went a half point. So then the question is, why'd you go so big? So the equivalence is uh, kind of like stomping on the brakes, right? Instead of feathering the brakes, what they did was they stomped on the brakes while driving their car. So then the question was, well, why are you going so big? Are you expecting a recession? And Jerome Powell said, nope, everything's going great. We feel that inflation is under control now, even though inflation hasn't come down to their 2% goal. He did say, we feel that inflation is under the control and the economy is strong. Therefore, we're going to lower the point by half of a percentage point. Those two statements, I'm telling you, dear listener, those two statements don't coincide. Typically, if you think the economy is going great, actually, if you thought the economy was strong, you wouldn't make a change in the rates at all. But he said the economy is going strong, therefore, we're lowering the rates more than we normally do. Doesn't make sense. So, our opinion, Greg and my opinion, is they aren't sure that the economy is strong. They're trying to avoid a recession and therefore are stopping on the brakes with rates. What that does is that it eases money, right? So if you've got a credit card payment, that should lower your interest rates. If you're out trying to buy a car, you're gonna at some point, it takes a little while for the rates to hit the market, but you will start seeing lower interest rates to borrow for a car. If you're looking for a house, mortgage rates will start to come down. That means you can buy a bigger house or afford more of a car payment, or uh, you have less money going to your credit card bill that you can then spend out in the economy. So that's why they lower interest rates. And so our opinion is that they're worried that a recession is coming. We're pretty sure it's coming if it's not already here. But that's their opinion. Now, for the rest of the year, they've said that they expect to make two or three more rate cuts at about a quarter point each. That will just free up money more. And the only reason they would be doing that is to ward off a recession. Typically, just looking at history, the Fed doesn't start making rate cuts until it's too late in terms of a recession. The recession is already here, and they start trying to pull us out of a recession by lowering rates. So I guess we'll see what happens. Now, there is some speculation that politics are at play here, right? If there's a recession before the presidential election, that might hurt the current administration. We'll see. Either way, no matter who wins the election, I think the new president will have to uh, deal with the recession, whether it's uh, Kamala Harris or Donald Trump. Either one is going to have to deal with a recession. Now, they may deal with it differently, but they're both going to have a recession on their hands that they have to deal with. Okay, so what did this do to our investments? Well, one of the things that we saw really climb up once they lowered rates was gold. All right, that's great news for our investors. Now, One question is, why did gold rise so much? Uh, here's my position that I'd like to throw out to you. Did gold really rise in price, or does it now just take more dollars because the dollar dropped in purchasing power? So does it take more dollars to buy that gold that was there? I think it's the purchasing power of the dollar came down, and gold's doing exactly what it's supposed to do, is keep plugging along as it's done since the beginning of time. So either way, it doesn't really matter because your investment portfolio is up. Okay. With that, you guys have a great week, and we'll see you next Monday. Take care.